The market is sliding, tariffs are tightening, investor fear is rising, and your portfolio might be bleeding. You might be worried beyond relief, but what if I told you this moment right now, it isn't a setback. It's your window to save big on taxes and build long-term wealth. If you're a small business owner, this episode is a must watch. I'm revealing 2 overlooked tax strategies that the wealthy use during downturns: Roth conversions at a discount and strategic tax loss harvesting. This is how smart money turns panic into opportunity and how you can do it. So let's dive into it. So first off, as you know, the stock market is crazy. We've seen losses. A lot of things are going on due to this new tariff that has been announced across different countries. And there's a lot of uncertainty right now, which is why stocks are starting to drop. And I just want to say one thing before we kind of dive into it is don't let fear drive you, but also don't ignore it either. Follow those signs. And we don't know whether this is a temporary drop and it's going to go right back up in a week or two, or if this is a long term, maybe it's a 1 year, 2 year, 3 year. We don't know exactly what this is going to be. Tariffs could be lifted tomorrow. They could be on permanently. We don't know what it's going to be. So we want to be strategic about what we're doing, but don't let fear drive you, but also don't ignore it. Think about these opportunities. And that's what we're going to talk about, what opportunities are available in a downturn, because I want to give this opportunity to say, hey, we're in a downturn. That gives you opportunities. This is not a bad thing. This is not something that we're going to go sit in a corner and mourn about. This gives us opportunities to utilize tax laws to our advantage. So the first one we want to talk about is tax loss harvesting. And this is basically where you sell stock at a loss, and then you can use the loss that you have from that stock to offset other gains that you have. And if you don't have other gains to offset, you can carry it forward. So tax loss harvesting is a powerful tool that people use all year round, but especially when we have big market dips or drops like we're in right now, it really opens up the opportunity to do this. Now, one thing about tax loss harvesting that I want to make you aware of, you need to be careful about wash sales rules. So the wash sale rules basically prevent you from claiming a tax deduction for a loss if you repurchase the same or a substantially identical investment within 30 days before or after you had the sale. So that prevents us from just selling it at a loss and then just buying it back at the low amount and getting right back into that same stock. That's the wash sale rule, and you got to worry about those 30 days. Now, we did a podcast episode where we deep dove into this with workarounds, strategies, everything about this back in December of 2024. So check out tax loss harvesting if you want to dive deeper in that specific topic, but just know that this is an opportunity to sell stock when it's low at a loss, and you can use that loss to offset future gains that you might have, which can be super powerful. So let me give you an example of this. Let's say you had a stock that you bought at $1,000 and it's now worth $700. That is a $300 loss that if you sold, you would be able to use that to offset other income that you have. Now, there's some passive activity losses and offsetting, capital gains versus ordinary income, but just know capital losses you can offset with capital gains. So that provides the opportunity. If you don't use that loss, you can carry it forward. So let's talk about the next powerful strategy that wealthy people utilize in a downturn, and that's called discounted Roth conversions. Basically, if you have money in a traditional account that you're looking to convert into a Roth account, this is where this discounted Roth conversion comes in. And remember, with a traditional account, you get a tax deduction when you put money into that account, and it grows tax deferred, but when you withdraw from that account in retirement, you get taxed on it. Whereas a Roth account, you don't get a tax deduction going in, but it grows tax-free and withdrawals are tax-free. So what a lot of people like to do is they like to do a conversion where they convert traditional money into Roth money. Now, when you do a conversion, when you convert traditional money into Roth money, you have to pay tax on the date of that conversion. There's a tax that you have to pay because you got a tax deduction going in. Now it's going into a Roth account, which you shouldn't have gotten a tax deduction going in. So you have to pay the tax on that on the date of conversion. But if the value is down in a traditional account, you can convert at a discounted price, which means less tax that you're paying on that conversion. So let's go through kind of a simplified example to help kind of drive this home. Let's say that you have a traditional retirement account that 2 weeks ago was worth $100,000, and now today it's worth $70,000. If you do a Roth conversion today, you're going to pay taxes, income taxes on that $70,000 that you're converting. If you would have done it 2 weeks ago, you would have paid tax on $100,000. So this is a super powerful opportunity. When stocks are down or when an investment of yours is down, we can convert it to Roth and get a discount on that Roth conversion, which means less tax. Again, if you would have converted that account, that traditional account, to Roth 2 weeks ago, and let's say it was worth $100,000 then, you would have paid tax on $100,000. if you convert it today, where it's now worth $70,000, you're only paying taxes on that $70,000. That's that super powerful opportunity where you can convert and do a discounted Roth conversion when the market is down. Now, real quick, if you're looking for tax strategies that you can actually implement, I built a software called TaxElm. We don't just show you how to save on taxes, we help you turn those strategies into real dollars saved with clear, step-by-step guidance and full implementation help. If you're serious about paying the least amount in taxes legally possible this year, click the link in the description and book a free discovery call with our team. All right, now back to it. Now, I want to put a bonus item in here because I think this is super powerful when you have a downturn as well. Downturn means opportunity to invest new money into the market. You know, when the market is down, it's really the best time to put new money into that market. Now, I want to say, don't try to be like a timing psychic. You're never going to get it right to say, okay, I'm going to put new money in exactly when it's at the bottom because then it's going to grow. It's going to be very hard to time when that exact bottom is, and more than likely than not, you're going to miss out on it, one way or the other. So oftentimes what we see is that we see investors chunk the money that they're putting in to help average it out. So let's go through an example. Let's say that you wanted to put $50,000 of new money into the market. You could put $10,000 into the market per week over the next 5 weeks. So $10,000 this week, $10,000 next week, and put that money into the market. Again, when the market is down, it provides a great opportunity to invest because we know at some point in time that money's going to go up, and we're hoping that it's down right now at a discount. There's something that's causing it, but we expect it to come up to this level that it was at before the drop or even higher, and that's why it provides a great opportunity to invest when the market is down. Now, I want to finalize this by talking about tax strategies to help offset taxes on a Roth conversion. Because remember, we talked about a discounted Roth conversion is great because you're paying less tax on it, but you still have a tax on it. So even though your conversion is discounted, it doesn't mean you get rid of that tax bill. You still have a tax bill that you have to pay for that conversion from a traditional money into a Roth strategy. And this is where we'd say this is the opportunity to utilize other tax strategies and advanced strategies to help offset that tax burden that you're going to have. So you might have a tax burden, but can we use different types of investment, different types of tax strategies to help offset that tax burden? And that's a lot of what we talk about at TaxElm that we work with small business owners with day in and day out. So again, just to kind of reiterate, the stock market's going crazy. It's dropping right now. Don't let fear drive your decisions. Don't let fear just back you into a corner, avoid you from doing everything. Take this opportunity to do what the wealthy do. They pounce on opportunities when the market's down. This is their time to grow wealth. And they can do that by utilizing tax loss harvesting. That's where you're selling your assets now that they're down at a loss. And then you can use those losses to offset future gains or other gains that you might have on a capital gain type aspect. Example, let's say you had a stock that you bought at $1,000. Today it's worth $700. You can sell that stock today at $700. That's a $300 loss that you can use to offset other type of income. But again, be careful here. You don't want to fall into the wash sale rules. The other strategy, which is super powerful, is discounted Roth conversions. Example, let's say that 2 weeks ago, you had a traditional account that you planned or wanted to convert to a Roth account, but 2 weeks ago it was worth $100,000. Due to the stock market drop and downturn, today it's worth $70,000. If you do a Roth conversion today, you're paying taxes on that $70,000 conversion, but if you would have done it 2 weeks ago, you're paying taxes on a $100,000 conversion. So that's a discounted Roth conversion that can be super powerful. And then finally, don't forget about that when the market is in a downturn, it typically is the best time to invest new money into the market. So now that we've kind of talked about these things, I hope that helps make you feel a little bit better, but also gives you encouragement and advancement to say, I'm going to take this downturn, this panic, this fear, and I'm going to use it to my advantages. So while the world panics, you've just learned how to pivot. Use the downturn to reposition your retirement accounts tax-free. Harvest losses that can save you thousands. But here's the key. These moves only work if they are done right. And that's exactly what we do at TaxElm. We don't just build you a tax plan, we implement it with precision strategy and full support so that you can legally pay the least amount of taxes legally possible. So if you're a business owner ready to stop reacting and start building up, go to TaxElm.com and book your free discovery call. Don't wait until the market recovers. The window is now. Let's make it work for you. I will see you on the next one.